Hey, this is Travis Wilkerson, the 2019 U.S. Investing Champion for the Futures and Options Division, as well as the author of the best-selling book Option Trading Made Simple, but most people know me as Trader Travis online. And before I get to the summary of today's content, I want to give a shout out to Buddy, who reached out on Twitter, said he loves my YouTube content, and was looking forward to another video. Thank you, Buddy. Because guess what? My own head trash, I don't realize if people enjoy my content. I've been at this for 10 plus years on YouTube, and my channel's not growing. So I figured, hey, I'm just too boring, and I know I'm Mr. Serious. I'm not the funny guy, right? I watch other little 20-year-old YouTube scammy gurus, and they grow their channel to like 100 something subscribers in like 6 months. I've been at this 10 years, and I'm not even close to 100 grand. So again, that's my own head trash, but you know, everybody needs motivation. So when you like, subscribe, you show the channel, you're also telling YouTube that other people need to view this content. And if I need to be better and release better content, hey, speak up, let me know. But anywho, let's move on. So the summary of today's video, what I want to cover is market prediction for 2023. I'm going to share the latest Buffett call option trade I just placed, and that is the trade that's taught in this book. I reveal Warren Buffett's secret billion-dollar strategy and how this guy helped me achieve financial freedom. And then I'll share how I'm using that strategy to take advantage of the current bear market. Then lastly, I'll talk about a webinar I attended yesterday. The presenter was a former floor trader, and how the entire webinar made me feel completely stupid. But even though I didn't understand 90% of what he was talking about, the 10% I pulled away from it was valuable, and I'll share that today. All right, so let's start with my market prediction for 2023. Just based on historically how bear markets work, bear markets I've traded through. Now, again, this is just my opinion. It doesn't make it fact, but I think we're probably I would estimate we're about 3 to 6 months from a market bottom. What I am waiting for is massive panic and fear. That's generally what it takes for the market to bottom in a bear market. I'm starting to see cracks in the economy. Friends are telling me, hey, I'm getting laid off. They're reducing my hours. Little things like that. I'm starting to see how the economy is tilting toward worse times, right? Now, the stock market it doesn't always pair it with the economy. It does for a short period of time. So, for example, let's circle back to 2007, 2009 bear market, right? Actually, let me pull up this other chart. All right, so what we're looking at is the 2007, 2009 bear market. So, when the market was bottoming out here in March 2009, things were still bad in the economy. People's lives were still shattered and wrecked, and they stayed shattered and wrecked for many years after the fact. Yet the stock market raged higher after that bear market, right? So the stock market had already recovered, and people were still suffering financially. So that's what I mean. Like right in the middle of the bear market, yeah, the market was down 50 something percent, and people had lost millions. They had lost their jobs, their houses. So the stock market and the economy was paired up. However, the stock market usually recovers before the economy. So you'll see people making a ton of money while people are suffering. So you can't always judge the stock market's movement by what you see in the economy. And that's what gets people in trouble. They're like, well, the economy is doing bad. The stock market shouldn't be going up. It's going to fall. I'm going to buy a bunch of puts. You can't trade that well. You can trade that way. It just doesn't work. It's not effective, right? The systems are effective. Put yourself in a position to make money no matter what the stock market does, and you'll be okay. And that's generally what we teach in our programs. So anyway, my market prediction is that we're probably about 3 to 6 months from a market bottom, but it really depends on when that massive fear will show up in high volume spikes. You'll see everybody selling. That's when I think we're closer to a bottom. That's what I think. Market doesn't care what I think, right? We trade what we see. And so that's why I have Market Club pulled up, because Market Club is telling us and has told us that, hey, the bottom might be in. We actually had a green weekly trade triangle here on 1024. I released another YouTube video saying, hey, did Market Club call the bottom? And it has not returned to that level. It did trigger another red weekly here, but now we just got a green. So, and it's right around the 200-day moving average. 200-day moving average is kind of like the granddaddy of sentiment as far as the stock market. When stock price is above the 200-day moving average, right, it's considered bullish. It's healthy. Prices are trading below the 200-day moving average is considered bearish, right? And so stocks most likely will fall or stay in depressed price areas. So we're really close to that deciding point to see if this is a bottom. Maybe this would be the first bear market that I've seen and participated in where we didn't get that volume spike. It could happen. I'm open to anything. I'm in a Buffett call trade. So this is an Excel I give to members who purchase my book. They get on the book buyer bonus list, and so they get to watch me trade in real time. They get access to my trade journal Excel, and so I just purchased this Buffett call option trade right now. I think it is up $205. And so again, this is my real money brokerage account. You can see that 4,344 call here. Let's look at the Excel here. See the exact same thing. So they're seeing my real money trades exactly when I place them in real time. The reason I'm bringing this up is because I'm in a call option, even though I think the market may fall again. And I'll actually talk about that. Let me write this down. So I'll talk about that towards the end, why I'm still doing that. But it's a system. I put myself in a position to make money in case the market goes up. And if it doesn't go up, I have money management or risk principles that protect me from losing a lot of money. So it's a win-win for me. If the market goes up, I'll make a lot of money. If it goes down, I'll lose a little bit of money. And losing a little bit of money is a win for me because guess what? What puts people out of business is losing everything. So one of the secrets to getting rich is just avoid the activities that will cause you to go broke. So now I want to move on because what I want to do is actually RJF, Sean, thank you all for your written reviews here. I read through every single review, so thank you. So I have your names here. RJF, Sean, Kim, and Patty. You're the only ones I have not contacted yet. Email me so I can give you a bonus. I'm giving a special bonus to people who have left a written review here. But anyway, I talked about this Buffett call option trade right here because I wanted to show everybody that, hey, I'm in a position to make money, and I encourage people to take action too, and I'll share why I encourage you to take action here towards the end of this video. Next, what I want to do is move on to Buffett's secret billion-dollar strategy. All right, so what you're looking at here on the screen is, again, what I call Buffett's secret billion-dollar option trade. This is a snippet from their 2008 Berkshire Hathaway shareholder letter. I'll read it and I'll summarize. Well, no, let me just summarize it. You can pause this and read this. But basically, Warren Buffett, via Berkshire Hathaway, uses options. Not many people know about it. So during the bear market of 2007 to 2009, you see here he's writing that, hey, our first option contract, that's what contract means, comes due in September. We have received premiums of $4.9 billion, money we have invested. Meanwhile, we've paid nothing since our expiration dates are far in the future. So in the bottom, you see a summary here. He sells market crash insurance, aka put options, and then invests the money received. So that's his billion-dollar trade. I did the same thing because the best time to use this is in the middle of market crashes. So let me break down how I reconstructed this for average investors like you and I, right? So again, sells put options, far out in time, receives money, then invests the money. So it's kind of a four-step process there, and I actually did the same thing in the Market Club Options program. If you're unfamiliar with that program, I'll put the link below. But basically, Market Club is a software that gives us entry and exit signals. You can see here they got us out. The software got us out in January 2024, January 24th, 2022, way before the bear market hit. So it got us out in time so that we didn't lose money. And so we're looking for that signal to let us know when the market has finally bottomed and going back up. But anyway, let's come back to this trade here. So this trade is, again, is modeling the Buffett. I sold some put options. Quick summary here because I don't want to make this video too long. You are agreeing to buy some stock, and I'm getting a call from my son's school because he's having some challenges at school. Let me pause this video. I'll be right back. I'm back! And everything is good. They were just praising. It's like, did you talk to him? Is that he was much better today? Just a quick rundown. Not that you care about my personal life, but I didn't want to leave you hanging. You're like, what's going on with his son? My son his gifting is bringing joy to people's hearts. He's the class clown. He loves making people laugh. So is still trying to channel that gifting. His dad is super serious OCD anal guy, right? So he's a funny guy. I love being around him, and we're not trying to change that a bit. But people like that in structured environments sometimes don't do well because other people, he's so disrespectful. I'm like, yeah, he's just making everybody laugh. So anyway, so some people, they view it as disrespect. They're not realizing that's his gifting, is making people laugh. So we're trying to show him like, well, son, certain environments, it's okay to be yourself. Other, you just got to follow the rules, be in a little square box, shut up and do the work, right? But when you're at home, you can be yourself, right? We're not going to yell at you for being silly. But anywho, so we're just trying to challenge that and work through that. So let's move back to here. All right, Buffett strategy here. So when you sell put options, you're telling your broker, hey, I'm willing to buy some stock shares, and in exchange for taking on that risk, you get some money. In this case, I got $1,100 or $1,185 to be exact. Just like Buffett, selling puts, except Buffett went out like 10, 15 years out in time. I didn't. I went out 1.5 to 2 years. That's generally what I like to do. And what I want to show you is exactly what Buffett did. He invested money. So I took this money here and I took a small gamble test trade, right? We got a signal that the market may be going up. I don't want to risk all of my money, just a little bit. If the market goes up, I make money, but if it goes down, I only lose 200 of my 1100 received. See that system there, right? You put yourself in a position win-win, right? If I lose all 255, which is rare, I still got a lot of money left over to still invest when the market goes up. But here, let me help you connect the dots here, because people don't see, this is what people don't see. It's a $6,500 account. I brought in $1,185 following a billionaire's blueprint, right? So based on my account size, that $1,100 equaled an immediate 18% return on my money without investing any of my own money, right? You click buttons, cash shows up, immediate 18% return, and I don't have to do anything for at least a year and a half. Just sit on my hands. I've already made 18%. The market doesn't even have to do anything. I'll just make money, right? And of course, we teach all the rules in the program, but just I'm giving you the big picture overview. You model what rich people do, you can get rich. So I brought this in, but just like Buffett, did he just sit on the cash? He invested it. So Buffett's had like 15, 20 years out on his contracts. So when his 4.9 billion, do you think he can turn that into 10, 20, 30 billion over 20 years based on his skill set and track record? Yeah, right? But he doesn't have to deal with the obligation and the risk of the puts he sold for 20 years. I don't have to deal with the risk of my obligation for about a year and a half to 2 years. So let's say I just double that. Can I double this 1100 in 2 years? Yes. If I do that, that's another 18%, right? Because again, this represents 18%. So in 2 years, now I got the money right now today. So I'm going to spend 2 years trying to double that money. If I do that, then I'm going to get another $1,100 in my account. That's a 36% return on my entire account, right? Without investing any of my own money. It's low risk to me. But again, it's over a 2 year time period. So I divide that by 2. So that's about 18%. I'm growing my account, right? Can I grow an account like this just following Billionaire's method? Yeah, I can. So that's how Warren Buffett helped me achieve financial freedom, right? I just modeled what he did and found low risk ways to invest in the market. Now, of my 6,500, could I just took 1,100 of my own money and invest it? Yeah. But what if I lost that? If I lost that, then I'm looking at an account size now of about $5,000, and I'm freaking out because I don't have much room for error. But following what Buffett did, I'm like, oh, I let other people give me money and then I invest their money. And if I lose it, I just lost money the market gave me. I didn't lose my original 6,500. So that's the way I kind of view it and think about it, a low risk way and invest. Moving on here. All right. So, well, I just gave you the last 2 points. I revealed Warren Buffett's secret $1 billion strategy, and I talked about how I'm using it to take advantage of the bear market. Well, let me help you connect the dots a little bit more there. If you think about it, the market already fell about 20%. And so it's sort of like probability. So you think the market's going to fall more. Can it? Yes. But it's not going to fall too much more. Well, generally speaking, unless we're in another Great Depression, but I doubt the Fed and everybody else will let that happen, right? So it's based on probabilities. We're selling options and saying we don't think the market is going to fall, and I sold about a $3,000 price level. That would mean the market would have to fall 40% from its all-time high. And so what I'm saying is, hey, I don't think the market is going to fall 40%. And so because the market's already down, fear is priced into the options, and so I'm selling this in less, and it's a low probability that trade will run into trouble because I'm selling it after the market already fell. So guess what? Here's the summary here before I move on. The market already fell 20%. Think in probabilities. What's the probability of it going up versus down? Is there a higher probability that the market will go up in the next 3 years, or a probability that it'll go down in the next 3 years? Well, it's higher probability to go up in the next 3 years. Why? Because it's already down. Now, if you had asked this question at the end of 2021, after the market was at an all-time high, I think went up 20, 30% in 1 year, right? Then you ask the same question. What's the probability of it continuing this run, or is it a higher probability of going down? At that time, it's a higher probability of going down. So think of it that way. And lastly, I'll shut up because this video is already getting too long here. I want to comment on that webinar, right? I attended that webinar by a former floor trader, And again, 90% of the webinar, I didn't understand. Dude was talking way over my head. And that's okay. I have an average IQ at best, but the 10% I pulled away from it was helpful. And I was like, gosh, this is why people have a hard time investing. I was like, these guys are so wicked smart. They don't know how to explain things in simple terms. But he talked about how the market makers kind of adjust prices of options. And so I had noticed this, but I didn't really understand why. And so if you look here, this is like in 2021, when the market's at an all-time high, call options were cheaper, put options were more expensive. Going back to probabilities, right? It was a higher probability the market would fall. Market makers know this, and so they're going to overprice the puts. So people are going to buy puts for protection. You're going to overpay for them. The market's already down now, and so what they did was they inflated the price of the calls, but he was like, you got to get that value from somewhere. You can't just pull it out of thin air. And so it's kind of a shifting thing. So now you notice the calls are incredibly expensive and the puts are cheaper. I'm like, a put like 3 years out for 4,800 at the money or right at the stock price. I'm like, yeah, that's usually not what they're usually paid for, right? They're usually a lot more expensive than that. But I'm like, oh, so basically they shifted the money from the puts and put it over here to the calls. Because again, they know people are loading up on calls to take advantage of the fact that the market when it goes up. Now, most people will tell you, don't buy them, calls are expensive. And they told me that in March 2020 in the middle of that bear market. Guess what? I ignored them. Why? I don't listen to people. I follow business fundamentals, right? It doesn't matter if I overpay for the call. The fundamental fact is if the market goes up, that call is going to increase in value. The market has to go up high to compensate for the fact that I overpaid for the call. Yes, but I overpaid for calls in March 2020 and everybody told me I was stupid. And you know what happened? I tripled my money ignoring people. So that's why I don't follow these smart people, because they're like, don't do it, it's over volatility, whatever. Right? I created simple systems, they work, and I have an average IQ at best, and I'm fine with that. Last thing I'll say before I let you go, I said I would share why I recommend, people are like, Travis, you think the market may fall, and here you are selling puts, you're buying calls, right? That's risky. And I can't tell people what to do, but I do encourage people. This is what I'm doing with my own money. 5 years from now, my accounts will be bigger, and people are going to watch it right in front of it's going to happen right in front of your eyes. And there are people sitting on the sidelines right now not doing it. And you know why? It's fear, right? That's why I encourage people to trade in the middle of a bear market, because it is freaking scary as HELL, right? And what that does is you overcome the things that are holding you back. The fear of loss, the fear of being wrong, the fear of making a mistake, right? Just the fear of losing money. Fear, fear, fear. It's holding you back. So yes, I think the market is going to fall, but I'm training myself to act in spite of fear. That's how you get rich, because guess what? I discovered in the bear market of 2007, 2009, that bear market helped us achieve financial freedom. And I don't know how I discovered it, but I discovered, the times you make the most money are also the times where it's the most scary to invest. When the market was at an all high in 2021, Bitcoin was up. Everybody was making money with meme stocks. It was easy. Guess what? Easy money disappears just as easily as you got it. It's when times are the scariest. That's when only the most courageous, bravest people step forward. And those are the ones that go on to build wealth. So hope you found some value in today's video. You take care. Again, thanks, buddy, for the push to release this video. And I will see you all in the next video. Bye-bye.